Welcome back to the Deep Dive. Today, we're digging into a stack of source material, basically building the cheat sheet you need for a pretty high-stakes professional challenge. We're focusing specifically on how you can successfully interview for an insurance underwriter role, especially within the UK market, which is notoriously regulated.
Yeah, this is definitely a specialized dive. It's for you, the learner, targeting a career where, frankly, precision is everything. And our mission here isn't just about memorizing answers, right?
No, definitely not.
It's about getting under the hood, exposing those core competencies employers are really testing for. Things like, can you genuinely manage significant risk? Can you navigate those tricky compliance rules? And crucially, can you apply critical thinking when, the data isn't perfect?
Exactly. We've got a really comprehensive guide here, and we've broken it down into three main challenges, you could say. There's the tough technical stuff.
Yep.
The behavioral tests, which often feel a bit ambiguous.
Always tricky.
And then the prep work you absolutely have to do to signal you're serious about the role. So let's not waste any time. Let's jump straight into that technical core, proving you've mastered risk and compliance.
Okay. So the underwriter's day-to-day, it's built completely on adhering to regulations and just being constantly aware of the market. It's fundamental. If you can't show you understand the rule book, well, you can't really be trusted with the pen, so to speak.
Right. Compliance is table stakes then. So how does a candidate actually prove they are keeping up with all those regulatory changes? It feels like a constant stream.
It is.
Yeah.
And it's definitely not enough to just say, oh, I read the news. You've got to be specific. Cite reliable UK industry sources. Show you understand that regulatory risk isn't negotiable.
Like which ones? What should they mention?
You absolutely have to reference regular reviews of updates from the ABI, that's the Association of British Insurers, and of course the FCA, the Financial Conduct Authority. Their newsletters, their guidance. But the real insight the employer wants, it's how you make sure those updates aren't just read, but are actually accurately applied. How are they embedded into the policies your team writes? That's the key.
Oh, that distinction, application versus just reading. That's really crucial. Okay, let's shift to the actual process. Assessing risk. If someone asks you how you evaluate a new application, what detailed steps should you lay out?
It needs to sound systematic, methodical. So step one is always careful review. You're actively hunting for any red flags, any inconsistencies in the documents provided.
Right.
Step two, you use all the data you can get your hands on. Applicant history, maybe proprietary models the company uses, current industry trends, all to quantify the exposure.
Makes sense.
But the source material really stresses this. Data is key, yes, but the underwriter must use practical judgment to balance the analysis. You have to show you can weigh conflicting factors.
Like what, for example?
Well, say someone has a perfect credit score, but maybe a slightly messy claims history in the past. How do you weigh those? You need to show you can reach a fair, accurate decision, considering everything.
Okay, that makes sense. So we've looked at the micro level of the individual application. Let's zoom out a bit. What about the bigger picture, the macro influences shaping the UK insurance market right now? How do you show you've got your finger on that pulse?
Yeah, this is vital. You have to show your underwriting strategy isn't static. It can adapt. So candidates really need to highlight factors like economic shifts, global inflation, interest rate changes. These profoundly affect reserves and investment returns. Then there are evolving regulations. Solvency Tuck is the big one to mention.
Okay, hang on. Solvency Tuck is for anyone listening who might need a quick refresher. What's the essential context there? Why mention it?
Good question. Yeah, Solvency Tuck is basically the main capital requirement framework. It defines how much risk reserve UK and European insurers need to hold. So citing it shows you understand the job isn't just about picking good risks versus bad risks. It's also about managing the capital needed to actually cover those risks if they go wrong.
Right. That context definitely separates someone who knows their stuff from someone who just memorized a term. You also mentioned emerging risks earlier.
Yes. And that's where you bring in things like cyber threats, climate change impacts. These are huge conversations in underwriting now.
I bet.
And candidates should also definitely mention technology, AI, advanced data analytics, how these are being used now to refine risk scoring pricing models. It directly impacts the underwriter's daily decisions.
Okay, so speaking of big risks, let's talk about protecting against the really catastrophic stuff. Reinsurance. Why is proving you understand that concept so fundamental?
Because it shows you grasp risk on a larger scale, aggregation, financial resilience, the whole portfolio view. You need to explain that reinsurance is essentially a form of risk diversification for the insurer itself.
Spreading the risk.
Exactly. It lets the insurer stay financially secure by sharing really large potential claims with other companies, reinsurers. This means the company can confidently underwrite much bigger, more complex policies.
Like covering claims after a major hurricane or something.
Precisely.
Yeah.
Something that might exceed their own capacity. Reinsurance ensures they can handle it without risking their solvency. It's like the ultimate backup plan for the business.
Okay, makes sense. Before we move off the technical side, there's that standard interview question. What's the largest portfolio you've managed? Why do they actually care about the number? Is it just about bragging rights?
Yeah, not really. They're not just looking at the pound value. They're gauging your ability to handle complexity and the control frameworks needed at scale.
Oh, okay.
The real insight they want is, did you understand the risk aggregation across that portfolio? What was your level of delegated authority? What control systems did you use or maybe even implement to manage that kind of scale?
So it's about the how, not just the how much.
Exactly. Saying you managed, say, a 150 million commercial property book is fine. But explaining how you monitored catastrophe exposure across all those properties, that's a much stronger answer.
Right. Okay, we've dissected the numbers, the rules. Now let's talk mindset. How do you stay precise, exercise good judgment, when maybe the data is messy or even missing? This feels like where it gets really tough.
Yeah, and this takes us nicely into segment 2, behavioral resilience. This is basically where the interviewer probes to see if you panic or get bogged down when things aren't straightforward. Take that question about solving a problem you've genuinely never seen before.
My immediate thought is always ask someone senior. But I guess that's probably not the A+ answer.
It's part of it, maybe, but it's not the first step. You need to outline a systematic approach. Show curiosity, show rigor.
So what does that look like?
Well, the steps are usually, first, assess the situation calmly. Don't rush. Second, try to break the problem down into smaller, manageable parts or variables. Third, do some research. Are there similar historical cases? What happened then? Fourth, then you consult subject matter experts, senior colleagues. And finally, you formulate a path forward, ideally driven by whatever data you could gather or infer.
And the key is showing that process.
Absolutely. The interviewer wants to hear how you thought it through, how you documented your steps. It's about demonstrating methodical thinking, not just luckily stumbling on the right answer.
Right. Show you're working. Okay, but what about when the problem isn't a lack of data, but conflicting data? Like, say, a client gives you 2 different income statements. What's the approach then?
When you hit that kind of ambiguity, the default has to be caution, thoroughness, verification before you proceed.
So pause everything.
Essentially, yes. You pause that application, your priority becomes verifying the sources. You'd likely reach out directly to the applicant or their broker for clarification, maybe request additional legally verifiable documents. You have to show you won't move forward until the data supports a fair, sound judgment.
Even if it means delaying things.
Even if it delays the process slightly. Yes.
But isn't there always pressure on turnaround times? How do you balance being super thorough with the need to hit, quote, deadlines? Do you risk losing the business by digging too deep?
That's the tightrope walk, isn't it? That's the inherent tension in the job. You absolutely acknowledge the deadline pressure in your answer, but you have to assert that underwriting integrity, getting it right, always outweighs pure speed.
So how do you manage that risk of losing the deal?
Communication. You mitigate that risk by clearly and professionally explaining the reason for the delay to the broker or the client. You frame it as ensuring the policy is correctly priced and fully compliant, which ultimately protects them too.
That's a great way to frame it. Excellent point. Okay, let's talk about mitigating risk more proactively. The source material had a really good example of someone spotting a recurring issue and fixing it systemically.
Yes, that's a powerful type of behavioral answer. It shows initiative. It's about identifying a pattern, not just correcting a one-off error.
Like the example given.
Exactly. Like noticing, say, that 80% of application errors seem to stem from one particularly confusing section on the online form.
Okay.
The proactive step wasn't just fixing those errors as they came in. It was designing and introducing a simple, mandatory pre-submission checklist for the sales team, specifically targeting that confusing section.
Fixing the root cause.
It's like it says.
Crazy.
Okay, that single systemic change probably reduced errors significantly, improved the quality of decisions based on better data, and crucially protected the company from potential liabilities down the line.
Okay, fantastic example. Now, just managing the day-to-day pressure, underwriting involves juggling a lot. How do you explain your strategy for handling multiple deadlines effectively?
Yeah, you need to demonstrate organization, especially under stress. Start by explaining how you identify which tasks have the biggest potential financial impact or maybe the tightest regulatory timeframes. Those get prioritized. Then, you talk about breaking down complex files into smaller, more manageable steps or milestones. Makes it feel less overwhelming. And critically, communication, again, if priorities suddenly do shift, maybe because of a market event or a new internal directive.
Which happens
all the time. You have to communicate promptly and transparently with stakeholders, brokers, whoever, to reset expectations before you actually miss a deadline. Proactive communication is key.
Right. And possibly the hardest professional decision an underwriter makes, denying an application. How do you explain handling that with professionalism?
This requires a real blend of empathy and sticking firmly to the guidelines. The first step is reviewing the case diligently one last time, making absolutely sure the denial is based purely on the underwriting rules, not any kind of bias. Then, when communicating the decision, you explain the reasons clearly, respectfully. But here's a high-value point to add. Offer alternatives if possible.
What kind of alternatives?
Maybe suggesting adjustments to the requested coverage that would fit their risk profile. Or perhaps referring them to a specialist provider who might be better equipped for their specific, maybe unusual needs. It shows you're trying to help even when saying no.
That's a really constructive approach. What if that professional composure gets tested internally? Say, conflict with a colleague over a specific risk decision or appetite interpretation. How should you respond?
Maintain professionalism above all else. Stay calm. Explain that your first step is always to listen actively. Really try to understand the colleague's perspective. Why do they see it differently?
Okay.
Then you clarify your own reasoning, backing it up with data, citing the relevant guidelines. The focus has to be on finding a collaborative, objective resolution that aligns with the company's overall risk strategy. Empathy here doesn't mean just agreeing. It means respecting their viewpoint while still upholding sound underwriting judgment.
This focus on professionalism leads us perfectly into our final segment, preparation. Because the interview really starts long before you even walk into the room, doesn't it? What kind of prep signals that you're truly dedicated?
Absolutely. The depth of your research is a huge signal about your commitment, your seriousness about this specific role and company. Candidates need to go way beyond just glancing at the About Us page.
So what should company research cover?
You need to look at their mission, their main product lines, yes, but specifically dig into recent press releases, news articles, showing you know about, say, their latest strategic move into renewable energy insurance or a recent acquisition. That's impressive.
And what about the wider industry context?
Equally important. You have to demonstrate you understand the broader UK market forces. That means actively looking at recent reports from the ABI and the FCA. Be ready to discuss how the current economic climate, for instance, is impacting premium pricing or underwriting appetite across the board.
So showing that macro awareness again.
Yes. And don't underestimate digging into LinkedIn. Look at the profiles of the people likely interviewing you or others on the underwriting team. It gives you clues about the company culture, their backgrounds, maybe even recent projects or priorities.
Okay, so you've done the research. You feel prepared on the content. Let's talk presentation. Why does the source material put such a specific emphasis on, well, the dress code? Seems a bit old-fashioned, maybe.
It might seem that way, but in financial services, particularly in underwriting, the visual presentation needs to mirror the precision and seriousness required of the job itself. It's about signaling professionalism and respect for the environment.
So what's the specific recommendation?
It's generally conservative and highly polished. Think a dark-colored business suit, a white or light-colored shirt, a conservative tie. For all candidates, the advice is minimal jewelry, neat grooming, and specifically avoiding strong perfumes or colognes. That attention to detail in your appearance suggests you'll apply similar detail to your work.
Right, it's another signal. Okay, finally, those questions designed to test self-awareness. Like asking about your weaknesses or a time you received criticism. How do you turn receiving criticism into a positive story?
The strength isn't in pretending you've never made a mistake. It's entirely in how you responded to the criticism. You need to show you take feedback seriously.
How?
Describe the situation briefly. Maybe acknowledge a time when, perhaps, a lack of attention to a small detail led to a minor error in an analysis. Then, crucially, explain how you reviewed your work, immediately made the corrections, and this is key, what you did to prevent it from happening again.
Like implementing that checklist idea we talked about earlier.
Exactly. Or adopting a new double-checking process, something concrete. It proves you learned from it and are committed to continuous, measurable improvement. That's what they want to see.
Okay, that makes sense.
So just to wrap all that up, to summarize this deep dive for you, the really effective underwriter candidate needs to prove they are analytical, definitely compliant with all those UK regulations, resilient when things get ambiguous or pressured, and fundamentally truly committed to learning and adapting. Because the economic climate, the systems, the global risks, they're constantly changing.
That is a fantastic, really practical breakdown of exactly what employers are looking for. And that brings us perfectly to our final provocative thought for you, the listener, to chew on. We mentioned earlier how AI and data analytics are getting better and better at refining risk assessment, even pricing. But at the same time, we've got huge economic volatility, inflation, recession fears, forcing insurers to constantly adjust premiums and change their underwriting criteria.
Yeah, it's a real tension.
So thinking ahead, maybe the next 5 years, how is the underwriter's core skill set going to shift? Will that economic judgment, that ability to adapt to complex real-time inflation data, become even more critical? Or could technology eventually handle most of that economic forecasting, leaving the human underwriter to focus more purely on compliance oversight and maybe more specialized client relationship management? Where does the human edge lie in the future?
Interesting question.
Something for you to consider as you think about stepping into that next phase of your